Okay, welcome to the algorithm and machine learning options trading live update. Today is March uh, 6th, 2025. My algorithm has triggered something called a buy signal with momentum. What we're going to go over in this particular presentation is the stock ticker and the momentum and how we're going to play it. We're going to manage our risk accordingly. So let's go to the charts. All right, so let's go to the ticker. The ticker is Next Era Energy. The algorithm that we're using are a machine learning type algorithm, meaning I can apply this to a broad, set of stocks and watch list. Has a particular methodology. Read below. Basically, I'm taking a 4 hour interval. Okay. Within that 4 hours, I'm looking at the hourly price. I'm looking at uh, open and close in the first hour, open and close in the second hour, open and close in the third hour, and the open and close in the fourth hour for a total of 8 points. I got the average of those eight, and I'm adding the high and low per hour. Okay, so I'm actually adding another 8 points. So you got 16 points in those 4 hours. So, but I'm looking at it over the course of 8 hours, just to look at it in a broader context. That's what I'm doing with a few stocks. In fact, I'm probably going back further than that. I'm probably going back probably closer to 30 or 40 hours. Um, but for day trading, I'm really only needing to go back about, what was it, 16 hours or so? 2 days worth of data. All right, let's look at the charts. All right, so let's go to the charts again. We're looking at the hourly chart for Next Era Energy. I'm going to direct you to the chart where I noticed something was happening. So go back to the beginning of the day on March 5th. Okay, that's Tuesday, right? I'm sorry, Wednesday. Uh, Noticed a big drop at the end of the day, continued to drop. Now we're looking at another lower high, correct? Generally speaking, the momentum slowed down a bit here. It's going down. I think it found a bottom. So I was already in a vertical put here, made a little bit of money at the beginning of the day. I could have waited till tomorrow. My closing price was closer to 68. We're at the 69.70 range right here. Sorry if you can't see it. Let me see if I can help you. What we're doing is we're going into the close of the day. So I exited around here on that play, um, which I entered somewhere around here. All right, so it's the end of the day. My signal turned positive because over these 4 hours, one, two, three, four, the average had been increasing over the previous four. So if we look at the beginning of the day, big red candle, second hour, third hour, fourth hour, we have some kind of average. Then you take the second group, one, two, three, four, still flat, then one, two, three, four, still flat. And then the last 4 hours, which we'll say here, whatever 4 hours ago was, about lunchtime, 11:30, 12:30, 1:30, 2:30, you'll notice it was pretty much a climb. So my average started growing. So I've entered a hedge, which is uh, uh, a vertical put to the bottom in case this fails. Um, and I'm going to enter a vertical spread, okay? Up closer to whatever, a couple bucks above. The expected move is only a buck at the end of the day. So anything out of the money is going to grow. If it decides to go back, great. If it goes down, I made money. So let's watch and see where we are for the next couple of minutes. Let's see if I can help you look at the price. Again, my algorithm is really straightforward and easy. All right. What we'll do is we'll zoom in a little bit. Again, there's a couple minutes left in the day. We're zooming in. We've entered the trade basically um, when the trigger was signaled, probably somewhere between, yeah, the price is right around here. 69.80, we'll call it. Um, it looks like we gapped down at 330. Okay. Um, and we're basically flat. Okay. We got some time to go. It's only a couple minutes left till the close. The price is at 69.99. We'll call it a $70. I'm hoping the stock, according to my analysis, we have a higher average. Okay, we've identified a turning point here. Um, let's wait. Let's see. So we've got a hedge, which means we are covered if the stock goes down to 69 or below, and we are covered if the stock goes up to previous highs. Now we only have a day's worth of data. We'll revisit it tomorrow, but this is an example of algorithmic trading, live trading, and using signals. It's something that you want to try to practice on your own. Okay, the price is going up. It's broached the $70 mark. We got a couple minutes of trading left. It's broached 70.01. It's starting to go up. And we'll go to the next slide in a moment when the market closes to show you the data and show you where my data showed a positive. And again, momentum means there was some momentum, as you know, to the downside. So it breaks every so often, but the momentum seems to have slowed down. But it's enough over the past couple of days that this momentum, if you see it from a couple of days ago, was pretty strong. That means the stock probably wants to go down a little further than it needs to. I would suggest we got lower lows. My hedge is on, so I'm good. But because a buy signal has been triggered, I wouldn't be surprised if this thing starts to turn around definitely by next week. Simple math, simple trade. It only happens with high volatility, which you'll find a couple days ago. That momentum is huge to the downside. It's taking a breather at the end of yesterday, and it just keeps going down. Not as much as 2 days ago. So Wednesday took a big turn down. I mean, Tuesday took a big turn down in advance of the speech. The speech didn't do much to help. Momentum to the downside slowed. Today the momentum seems to be evening out. So now I'm looking at, look, this is a momentum driven stock, but it's also a stock that is probably fair valued right now and a long term buy for many people. Let's see if I can take it out a couple months for you guys and see what is it saying. Yeah, so Next Era has traded as much as $80 over the past couple weeks to couple months. Let me see if I can stretch it out a little more here. But momentum is a factor that you need to understand. Like the stock isn't going to just do a V-shaped reversal, is it? So the stock here in January has been very volatile. Look, it went to all-time lows down there in the 66 range, but it was as high as 73. In December of last year, it was well over $75. So if its momentum is slowing down and choppy and it goes back up, which it will, I want to be prepared and I want to hedge my bets. So let's look at the data now, okay? So at the beginning of the day of March, the stock was trading at $70.05. Every cell represents a different price. Every four cells represents a different hour. So 70.61 is the price. At the second hour of trading, 70.73 the third, 70.87 the fourth, 71.14 the fifth, and the price closes at 71.64. $70 to 71.64. Overall was a bullish trend, correct? So that's what's covered on this end. Okay. Let's speed down to the next day. 71.96. 71.96. It goes down to 71.38. That's the fourth. 71.32. 71.32 to 69, so it went down on the 5th, and today it went from 69.96, basically flat today, okay? Let's take it from the top and show you this algorithm, okay? So after 4 hours of trading, the stock closed at 71.14, okay? Closed at 71.14. The average for that day was $70. For those 4 hours was $70.72. We know that the close was above the average. We know that the day overall was bullish. Okay. All right. I wrote down here in the notes that's a negative value because we were saying the average is below the closing price for those 4 hours. So every hour I went and I compared to this rolling mean. And you notice negative means that the average is below the closing price. So it got positive. Um, it got positive. That's the wrong date. It got positive at this point. 72.24, $72.24. $72.24 on the 4th of March. So going over to my chart, 4th of March, $70. We said what was it? Um, let's see, 72.24 around 11:30. 72.24 around 11:30. There's 11:30. And yeah, 72.24 is the start of that red candle. So, using this algorithm, as soon as you see that go from negative to positive, you have gone from momentum in the positive to the negative. Okay, so that signal right there tells me once the price opened, okay, I want to take the price at the open. How's it compared to the previous mean? It is no longer above the mean. The mean got shut up because that extra candle really took out some values. So what happened if you had put in a little bit of a position to protect yourself going up, a hedge position, you'd have been in the money because you were right. The stock continues to go down. Okay. That's it. That's what happens with these analyses. They give you little signals. I'll go into greater detail tomorrow for my close of the week analysis of next era. But thanks for watching. I hope you enjoyed it. Have a nice afternoon.